Good morning from Chicago traders. It's 8:03 a.m. Chicago time on Wednesday, FOMC day. It is the 27th of July, 2022. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, let's dive right in. There's a lot to process here. Yesterday was an interesting trading day, and today is likely to be even more so. This morning, we have a market that is mild risk on. The NASDAQ taking a leap higher. Yesterday, the NASDAQ was the weakest of the bunch. And this morning, of course, after Google and Microsoft announced. And by the way, note that Google and Microsoft had actually missed their missed the expectations. So to report, Google, which generated $69.685 billion in revenue in Q2, was expected to generate 70.04. So it missed by about 51 basis points. But on the top line numbers, the earnings, they came in at $1.21 versus $1.31, missing by about 7%. Microsoft generated 52.47 billion or 51.865 billion versus 52.47 billion, and missed its earnings by 3%, came in at $2.23 versus $2.30. But you know, the way the market works is always interesting, because this is actually good news, and we popped higher on that. Currently, Microsoft's up 3.68% and Google's up 3.97%. And the reason being, the guidance was pretty strong, and the market actually expected them to miss by more. So this has caused the NASDAQ to be strong. The NASDAQ's up 1.54%, as you see in front of you. And the S&P is trading at 3960, which actually ends the 1 day of one-time framing down that we established. Remember, I've been talking since last Friday? No, since Monday. I don't remember, about the market making a rounded top and very likely turning over to go back to 3909 at least for a test, which yesterday it started to do. So mild risk on this morning. Crude sitting at $95, got as high as 98 yesterday, I think. I believe is where it was trading. This morning we got Boeing. We got, we're at the height of earnings season. So, you know, there's just a lot on the earnings calendar. But we got Boeing this morning, 16 billion generated, missed its earnings by 131%, was expected to come in at 16-cent loss. Can you believe a company this mature is still losing on its stock? And it came in at 37 cents. T-Mobile was expected to come in at 28 cents in earnings and came in at negative 9 cents. It lost 9 cents, missing by 132%. And then there were several others that came along this morning. I won't go through all of them. Spotify was another one that reported, generated $3 billion, was expected to lose 65 cents, lost 91 cents, missing earnings by 40%. And those are the kinds of numbers that the market was expecting. Shopify, for those who have heard of and maybe traded this very buzzy stock, Shopify, SHOP, missed by 200%, generated 1.295 billion in earnings, missing its revenue number by 25%. But then it was expected to earn 3 cents. It lost 3 cents per share, missing its earnings per share by 200%. And so now this gives you some context as to why, even though Google and Microsoft had missed that the market's responding positively. So that's what's on deck. General Dynamics, Credit Suisse, Deutsche Bank, Bristol Myers Squibb, pre-market, and then after the market today we're expecting Ford, Meta, and Qualcomm. Again, these are very important releases and the market's responding accordingly. And then of course the big one today, FOMC. So FOMC is expected to hike 75 basis points. The market is really has really priced the living bejesus out of this upcoming release, and there's high confidence that 75 basis points is going to be the number. Here's the Fed Watch tool from the CME straight to you. We're at a range of 150 to 175. And there's a bet, a 74% bet that we go to 225 to 250. That's 75 basis point increase in today's report. So as we go forward, remember the current rate's 150. As we go forward, pricing in basically really almost a 50-50 chance for another 25 basis points or so in September. In November, pricing in another potentially 25 basis points into September, into December, pricing in about, well, if you look at November, 325 to 350, the target rate gets 44.7%, but then 325 to 350 target rate gets 40%, which the market is pricing in a stall in the rate hikes. And then as we push into February, we're looking for the Fed to stop, and then going deep into March and so on. Really, what the market is pricing in is a reduction in these rates. Today, this morning, I know there's a lot to cover. This morning we got the GfK consumer confidence out of Germany, Deutschland. It missed, came in at negative 30.6 versus 28.1. It's a major number. Durable goods orders out of the U.S. came in at 8:30 Eastern. Came in very strong. We saw an immediate down reaction there. 1.9% versus expected negative 0.3%. The prior 0.8%. The balance, a goods trade balance came in slightly better. Was expected at a deficit of 104 billion versus an actual deficit of 98 billion. Wholesale inventories came in at 1.9% versus 1%, and yada 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 yada. This morning we're getting pending home sales at 10 out of the Realtors Association, expecting a drop in pending home sales year on year for June of 9%, month on month, expecting a drop of 2.1%. Then we get into the crude oil inventories and gasoline inventories, and then we have the Fed rate decision. And while you're in between the crude oil inventories and the Fed decision, I want to make sure you know about this event that's taking place where a handful of well-known macro traders are going to be on the Futures Radio Show sponsored by EdgeClear. A reminder, EdgeClear is an independent futures brokerage that I own. The giveaway entries are required to be in by 11 a.m. Eastern. Those are the entries. And then the show starts at 12 p.m. Eastern. The show goes for an hour, and then an hour later the FOMC comes out. You can do all this. You can join and have and participate in the giveaway, which is worth $6,300 worth of giveaways today for 4 prizes. You can do all that by going to edgeclear.com/daily and then tune into the show at that same URL at 12 o'clock. Okay, that's the plug for that. Okay, back to our summary. The S&P is 100% long this morning in terms of inventory. The volume is 158,000 contracts, which is meh. And the range is 29.75 points, which is meh. The point of control, again, as it was yesterday for the overnight sessions, 39.57 on the nose. Yesterday's point of control is 39.57 as well. So, well, that's a lot to cover, right? A lot to hear, too. Here's what was expected. I talked about, this is from yesterday's show. I talked about how the market's likely to roll over. How the market is likely to roll over. Seeing signs that it's likely to roll over. We're expecting a test of 39.09 and the one-time framing up to end with yesterday's session. If I go forward in this video, I talked about the posture of the relative delta, that the relative delta is really pointing down with everything falling below the zero line since the beginning of the session, and that there's an expectation that there would be a drag down. There will be a drag down on prices. So we did have a splash down to 39.45, and we were likely to take out the prior day's low, which was at 39.46 or so, and that would set off one-time framing down, and we expect that to slip down to, as quizzed yesterday, 09. First test is 20. 20 is the next big area, and then 09. Actually, it's 35. Let's see if you guys remember that what was said on Monday. Don't expect you to. What was at 35? 39.35. There was something important there to test at first. 35, then we go to the 20 and the 09. Let's see how well you know your levels and your price map. If you don't know your price map, it is really hard to hold on to trades. Tell me what was at 35 and tell me what was at 20 and tell me why I was expecting it to push lower. Let me rewind. Okay, there it is. Go ahead and tell me. The levels were, if we break the one-time framing, which we had at 45, at 46, we are likely to slip into 35, then 20, then 09. I'll tell you the answer. 35 is the prior week's prior week's point of control, volume point of control. Prior week volume point of control. It is the most immediate balancing price we have. Okay, so if you go to last week, you'll see that the point of control is, I'll show you it here. Sorry, I know there's a lot to cover and a lot to digest here. You're drinking out of a fire hose here, but it's really important to be up to speed. Let me pull up a separate chart for this. It's loading, yada, yada, yada. So 35 becomes the first line in the sand, and here's where it comes from. So if we look closely, remember each one of these boxes is a week. The change in color of the boxes is monthly. And it brings me to another point I want to make. This is the volume point of control from last week right there, 35, the most valuable price from last week. Then comes what? The 20 comes the single prints. We close these single prints right here. That would be the 20 area right here. And then we come into the 09, which is the most accepted price in the area immediately below that. That's the MC point of control for this region. And that's why we're expecting the market to kind of push through, retest, or chop around in there. It doesn't mean it'll hold. It just means that those are important areas to test. Okay, so let's get out of the past and look at the present. Le présent, as our French friends say. Look at what we've got overnight. Another beautifully Gaussian profile. And to bring you back, to jog your memory again, yesterday Look at this. Look at this profile. Look at that. It's just a thing of beauty right there. Yesterday's profile completely Gaussian. Today's profile completely Gaussian. Yesterday's profile, the point of control is right here. It's a pink line. It's hard to see on this chart. And today's is a pink line right there, both at the same price. Okay, so, and we are just above that price. This is overnight acceptance here that is going on, and what we have behind it is this balance above, balance below. We're in between a rock and a hard place, and to bring you back, take a look at where we are in the big picture. Remember, on this chart, the colored boxes, the color changes for every month. So as this changes from light gray to dark gray, that would be the first day of July right there. So look at where we've been for the month. We've basically been trading inside of the prior month. 36.39 is the low, and whatever the high is here. Let's see what the high is. The high is 41.78. So we've spent the entire month with just 3 days left, trading days left. We've spent it in this super tight range relative to the prior month. Really haven't accomplished all that much in this current environment. We're stuck. We've tried to move up and away from the lows, but when you look at the big picture, let's zoom out a little bit and not be so myopic. So let's get rid of everything but the profiles. Okay, if you look at what we've done, we really haven't moved away from that low all that much. We filled in this gap. This was the 40.16 right here, and we remain in this zone. And we haven't, I mean, it is the summer, so don't expect too much to be challenged here. But I was looking for the 40.16 to be filled. I was looking for us to go to 40.71 and challenge this prior low up here, maybe push. But we are seeing collapsing volatility. Close to close volatility has dropped dramatically. It's about half of what it was from 3 months ago, and that's common for a rally market. Okay, those are the macro kind of the bigger picture ideas. What are we looking for today? So we can all leave. Remember, it's FOMC day. Please don't commit. Please don't commit. Come on, baby. Come on. Load. FOMC day. Don't commit. We started one-time framing down here. Yesterday triggered the one-time framing down, and then today is going to break that high. What does that mean to me? It means that we are likely to be stuck in this zone here. I'm not expecting this FOMC to move us very much. I'm expecting us to kind of sit in the middle here, and indications from relative delta. Just took a tumble here. Let's take a look what news is out. No, not seeing much. Relative delta is relatively positive, but we're very likely to go right into balance right off the open today. So please be sure not to overcommit and to try to push trades. It is not a good day for that. We still have the 09 as a key target below. Above us, we have the 39.97. 39.97 up here, and we have the 40.16 quarter up top, and then yesterday's low again, the 09 remaining as the bracket. So it's 09 to 97 is the range. We closed at 23 and we're bullish above it. We're opening right around the point of control for this region at 57. This is very likely to be choppy. So it's really one plan today, and that is open auction out of range of yesterday. I expect a response. The inventory is 100% long. I expect a response into the 50. So look for the 50 here first. I expect it to retest this 36 to 40 area for a bounce, and then FOMC. If it doesn't do it before the FOMC, then it'll do it after. It's likely to do it after, and then from here I expect it to kind of hold and then start moving towards this last key high and the 97 up here. That's a fair amount of range, about 40 to 50 points. That's pretty much it. If it tests early, then I want to see how it approaches the 39.80 stock zone here, 39.78 I think, how it approaches this stock zone. But if it hesitates and I get an impulse down, I'm going to look for any pullback to short. It has to fail first. It has to show me, and then it's back to 57. That would be the trade short on an early test. But it's expected to be choppy in the morning, and it's really important to not start the day with a hole in your pocket and to just wait. It is better to wait for clarity. It is better to hold out for the first 20 minutes. We do have that pending home sales number, but from there, it's likely to be just a chop fest, as nobody's likely to commit in either direction ahead of the FOMC. Keep your powder dry, and don't try to trade the number on the release or the conference on the release. Just look for impulses, look for your setups, patterns, whatever you're after, and wait for that. Don't forget to catch today's show, and to sign up, go to edgeclear.com/deli, giving away 1 year of the multi-asset News Squawk service. That's worth $3,600, in addition to 3 other shorter-term subscriptions, free subscriptions. Get in there to see if you can win the grand prize here. The total for these prizes is $6,300 to be given away today at today's show. edgeclear.com/deli. Good luck.